Hello and welcome to another update video about Natgas. Quick update about Natgas as we are still going lower. That is also still the idea, or was the idea in the last video I provided. Was it yesterday or a couple of days ago? I think a couple of days ago, where we saw here a small bounce, which I interpreted as just a corrective bounce in wave 4 with one more low to come in wave 5 of C. So we're currently moving down in this corrective pullback. I interpret this as a larger wave 4 at the moment from a bullish point of view. Now, I'm not per se bullish here. I'm not clearly bullish. I'm not saying this is a great setup. I'm not saying, wow, this is really giving me great confidence. No, this is not what it is. If you watch previous videos, then you know that my view is that this here is probably a 3-wave move up. Well, it is a 3-wave move up. The question is, does it turn into a 5-wave pattern to the upside, which would give us, from an analysis point of view, some confidence that indeed a substantial low formed in February and that we might see the price reach medium to long term like $10 to $11 or higher, because we would have completed really a major correction, several year long lasting correction. And we could now be on our way back to the upside. But I need to see a first 5-wave pattern, as indicated now here by the red lines, 1, 2, 3, 4, 5, to get some clarity. The 4th wave can be deep, but ideally we don't break below 224. Now, if we do, it's still acceptable, still tolerable within this white scenario, which is the bullish one, because this move up is not an impulse. If it was an impulse, which has certain rules and guidelines, we should not see the wave 4 go below the 50% fib level. So definitely not below 224. But because it could be a diagonal for various reasons I don't want to get into, it could be a diagonal pattern. Then I normally leave space all the way down to the 61.8 retracement. Now, these are my guidelines, okay? I found them to make Elliott wave much more, let's say, reliable, because I have an objective way to say, okay, this is likely not a diagonal anymore. It is something more bearish if we break below $2.06, where you might find some Elliott wave analysts who say, okay, that wave 4 could technically in a diagonal go all the way down to that wave 2 low, the April low at 157. I find that useless. From an analysis point of view, because it just doesn't have the right look and it would be too deep for a wave 4. This makes sense. So there are some guidelines that I use that I've refined over the years that make the analysis more, I find objective. So I can't remember the last time that I've really seen a wave 4 that would go below the 61.8 fib level. Typically doesn't exist. Yeah? So it really, over the last couple of years, I haven't seen a single one, I'm pretty sure. So this it's not there, you know, it just doesn't. Maybe it exists somewhere, but I haven't seen it in a long time. So I go with probabilities. So that means in the very short term, price action is still bearish. Whether that's overall the yellow count or the white count will only become clear if we break below $2.06, because below that level, it's clearly not the white count anymore. If we turn to the upside from somewhere here, we might have started the 5th wave to the upside. Initial upside breakout signal would be now a break above the trend line and possibly the last high that formed here at $2.45. Next support is 224 and below that level $2.06. I would definitely be watching here the 224 level to see if it reacts. And then for any breakout indication, the trend line, because it has enough touch points to be relevant. That's my update about Natgas. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.